right, let's get into this. So, week of May. This is not for this. Don't mind this. Week of May, the 5th through the 9th. Let's get into this 5 minutes. So, I'm gonna talk about this trade. Let's see if we can. No executions. Anyways, well, fine. So right here, May the 7th, 12 o'clock, 7 minutes, 6.5 minutes before the start of a new day. So 10. Don't think. Oh, so 10 at 13, 20. Go ahead and check that out. So 13:20 right here. Right in there. So we sold here. Go ahead and talk about the reason behind this trade. Okay, so talk about top down analysis through time frames. This is the current week we are trading in. We have the open. Last week opening price, the open. Right there. We also have the low of that week here. And a low hanging fruit objective for the weekly chart right here, which is the high of the fair value gap that can be seen from this candle to this one. So on that daily fair value gap that was seen, which is right here, we had opportunities for a lot of trades to unfold in this consolidation range. Now, I don't not recommend trading consolidation ranges, at least not for a beginner or someone that's looking to get into a market. But for the euro, since I am expecting a bullish seasonal tendency on the dollar index to take place in May, I built the framework on bearish trades only. So let's go ahead and get into that. So we had Sunday open, weekly opening price on the week for Sunday here. Now, generally, you should give the market some time to show you its hand, um, for just so you can see draws on liquidity or where smart money is making their play. So right here we can see price opened on Sunday and started going higher. Monday into a fair value gap inside a order block that's hitting a order block. Took us higher, just above that last week's opening price. Now, I don't condone you taking a trade like that, uh, especially since we are in a bearish scene or want to be in a bearish scene and are based on our trades framework in that way. So we had a sell-off, and this was at New York session 9. Okay, well, moving on, we have Tokyo. Tokyo swept down, took out liquidity from Sunday and Monday, and just started going higher, just offering higher prices. Now, I did take a trade here, but ultimately got stopped out. With this move, it reversed and kept going higher. I wanted to see price inverse here. Ultimately, we did not, and we just had price go above that weekly opening price. And the news factor on Tuesday was a bearish move. You could see that price went above the previous week's opening price and traded downwards using lunch low as objective for price, and market ended off closing New York session and then began Tokyo. So let's talk about how I got into the setup of this trade. So we have a daily fair value gap that left behind a 4-hour gap right here. This was on Wednesday, that news factor. Go ahead and draw that out in time, and retracement to grade our areas. So coming back down to the 15-minute, we have price come back into this area. Tokyo session led us back into a premium. There, price was hanging around and respecting that 50% level. There, you could see price as a breaker. This low took out this low, and this high took out these highs. You can zoom in for a better visual right there, and right there. Swing high, swing low. You could also use this as a swing low. There. So right here, this 4-hour gap, as in the 1-minute chart, price traded outside and went back in. Back side, the 4 hour lower quadrant, into a gap, into an order block, into another order block on the higher time frame. So we can set our sell position there with a stop right above the 4 hour gap. There, here, going above Tokyo. And we can trust the fact that price no longer wants to come up into that area as it is in a premium. Now, where do we know to take profit? Well, or areas of right here, this weekly wick, we could use a grading mechanism there, and price scooped in there on the 50. Also taking out previous day highs right there and right there. Now, why did I close trade and not continue heading to my, well, what I termed then my low hanging fruit objective? Well, price is in that weekly wick there, and it's been consolidating around these areas for a while now. So I don't know, and you don't know, if price is just going to come down and reverse on you, take out your stop, come after these highs and also these highs. So that's why we have in place a set of rules, and a rule for you should be to outline a framework for your trades, as said by Guru ICT. So yeah, that was Thursday, London pre-session, of course. We should be getting into that pretty soon. Let's see, which we are, London, there. Now, could price come up and take these highs out? It's very likely. I'm not too certain, but it's always better to be on the safe side. Take your profits. Take profits as you go. And yeah, here's a below that weekly opening price. There's a fair value gap. Could this be a condition to set price even lower? Absolutely. You should always take into consideration time. I saw price consolidated after 12 o'clock. Grab liquidity right here and spooled lower on this fair value gap. That was more than enough confluence for me to take a short, exiting this 4 hour gap right here, as you can see, and was shown on the 1 minute time frame. There, you can see price clearly leaving and just giving you entries on entries on entries from that point forward. And yeah, for Friday, I don't trade Fridays. I pretty much expect price to not really break this range. I don't think it will break that range because of the equal highs that were left previously. I can, as it can be outlined as a daily liquidity point there, price could come into this weekly gap there, which is the fair value gap, and then reverse to sell above the equal highs that were left previously on these weeks. So that is pretty much it for this video. I've been trying to put a lot of ideas together for more or explanations. I can't really tell you everything that you want to hear, as it being that I am not inside your mind, but I will try to make it very clear on the reasons why I took that trade. So yeah, that is